Good evening, everybody. My name is Nick Dasher-Brown. I look after the IR at Anexo. Thank you for filling in the poll beforehand. So we're roughly 50-50 existing and non-shareholders. I'm afraid for those of you who are very familiar with the company, you're going to hear it all over again for the benefit of those who are not. And so I'm afraid I'll start at the beginning and carry on till I get to the end and then stop. And then obviously we've got time for Q&A afterwards. So what does Anexo do? Anexo is effectively a one-stop shop for, I do beg your pardon, I should have said this before. Can we start with slide 3, please, Amanda? Thank you. Anexo is a one-stop shop for the victims of non-fault road traffic accidents. We are an integrated credit hire and legal services group. That means on the credit hire side, we provide vehicles to the non-fault motorist who's been deprived of their vehicle by an accident. And on the legal services side, we use our in-house litigators to recover the hire and repair charges from the at-fault motorists' insurers. We concentrate on the impecunious claimant, and this is really the key to what we do. The impecunious claimant, what is impecunious? Effectively, impecunious people are those who do not have any money, therefore they do not have access or the means to provide themselves with a replacement vehicle through their own efforts. That means they can't hire one, they have no credit, they have no ability to buy a second-hand banger to keep them going. They are basically on the bus if they're deprived of their vehicle. We get these customers through what we call our direct capture business model. That means that we don't involve insurance companies. There's absolutely no need to involve an insurance company in a non-fault accident. It's a misconception that there is. We use a network of introducer garages. We have about 1,200 of these across England and Wales. And what tends to happen is that our customers will go to the garage and say, I've had an accident, what's it going to cost to fix it? And if it is one of our garages, and they're lucky enough for that to be so, they will be introduced to us, and we will explain how we can provide them with a vehicle and get their vehicle repaired, or claim the value of the written off vehicle where appropriate from the at-fault person's insurance company. This is underpinned by UK case law. There's no statute on this, but there is a series of case law decisions, including 3 which have gone all the way to the Supreme Court, which says that the impecunious claimant has the legal right to recover credit hire costs, and we are able to charge credit hire rates as opposed to the spot rate, which you would normally get if you're just renting a car from one of the high street car rental companies, because that reflects the extra risk which we are assuming. Now we're slightly, hamstrung here because the numbers which we have in this presentation are necessarily historic. They're for the first half of 2020, in other words, the half year ending the end of June. Our final year results will come out in late April. So to a certain extent, these numbers are very historic, but such is the way of the world. 36.6 million turnover, profit before tax of 6.7. And the key thing for us is that we were net cash generative throughout the first half of 2020. If we could move on to slide 4, please. So the business overview here, it's very straightforward. We divide our business into 2 parts: Edge, which trades normally under the trade names of Direct Accident Management, and McCAMS. This is the vehicle provision unit, the credit hire services unit. So DAMS looks after car and light commercial vehicles, McCAMS looks after motorbikes, and we also have a subsidiary called CAMS, which looks after bicycles. As I said earlier, we've got national coverage, and the key route to the market is local body shops. These are not main dealers. These are my executive chairman, Alan Sellers, calls them Fred in a shed, because broadly speaking, that's what they are. It's 2 blokes with an inspection pit and a ramp. And these are the people who our customers would customarily go to. So it's very useful for the repair garages themselves. They get paid in full and on time by us. They get a very satisfied customer, and they get repeat business from recommendation as a consequence of that. On the other side of the business, legal services, that's Bond Turner, which is a fully operational firm of solicitors. They look after the recovery of hire charges and repair costs from the at-fault insurer. And that involves also specialist reports, PI reports, and so on where necessary. And all our Edge business goes to Bond Turner. That's not the same as all Bond Turner's business, but they do all the Edge business that there is. On top of that, we have an advocacy division, which is led by Alan, who's a barrister by training, which looks after other types of litigation which are not specifically road traffic accident derived. So, there's considerable professional and clinical negligence cases, and we're also heavily involved in things such as the VW emissions case, which is something which I will come on to later. We can move on to slide 5. So just to be clear where we are in terms of the impecunious motorist and the way we do it differently. Normally, if you have a crash, if somebody shunts you in a traffic jam, then we're all accustomed to the idea that we swap insurance details with the other motorist. Our insurance company will ring us up and say, well, if you tick the box, then we'll give you a hire car. Quite often, they won't give you a hire car of the type that you need, and they won't give it for the full period which you need it for. So I often tell this anecdote, but 20 years ago, I had 4 small children in the back of a people carrier when we were involved in an accident, and I was given a Renault Clio to fit 2 adults and 4 children under the age of 10, which wasn't particularly helpful. And we only had it for, I think, 12 days, and the repair itself took 6 weeks. So not helpful. What also happens when you go through your insurance company is that you'll find that when you come to renew your premium, the premium has gone up, your no claims bonus has been affected, and it is not economically advantageous to you. Now, the Anexo claimant doesn't want to go to his insurance company, his or her insurance company, and there are 3 main reasons for that. Number 1, they won't have ticked the no claims bonus protection box. They won't have ticked a replacement vehicle box because ultimately they want to keep their cost of insurance as low as possible to make them road legal. That means, broadly speaking, this is the 3rd point, that they tend to be third-party fire and theft. And also, where you have an excess in the insurance company, they will tick the box for the largest possible excess to keep their premium down. So if you have a vehicle that's worth, I don't know, £500 to £1,000, you have an accident in it and your excess is £2,000, there's very little point in claiming because it's not going to get you anywhere. That's why they have no means, they have no incentive to contact the insurance company. They would rather do it through other resources. So that shows you there, and at the bottom, no upfront cost or loss of no claims bonus, and the hire car is available for the full length of repair, or, and this is important, until they are in receipt of a check for the write-off value of the car if it is deemed a write-off. There is a court-appointed engineer in all these cases who will say, okay, this is a repair case and this is what we think it's going to cost, or this is a write-off. And clearly, until they receive the check for the write-off value, they can be using one of our hire cars for a very considerable period of time until the insurance company decides to pay up. It is also worth pointing out that insurance companies basically are reluctant to pay up. Their job, as far as I can see it, is to protect their balance sheet. And so what tends to happen, and this is really crucial in terms of what Bond Turner does, that we make a claim against the insurance company and they tend to ignore us. We make another claim and they tend to ignore us. Rather than spending our time sending increasingly pointless letters or emails or phone calls, whatever it may be, it's very straightforward. If they ignore us, then we issue a writ and we instigate court proceedings against them. What quite often happens is that that will go all the way to the court steps before they settle. But the point is that we are aware at the time that we issue the writ that that case is going to come to court at some stage in the future and we will get our money. So if I can move on to slide 6, that is a straightforward way of explaining how it works in tabular form. So direct capture sources, body shops, vehicle workshops, recovery agents, and we have a group of, I think it's now 24 sales representatives who cover England and Wales, whose job is basically to go around the garages explaining that if they decide to introduce a vehicle to us, a customer to us, then, as I said before, they will get paid in full and on time, and they will receive the considerable praise of their customers. And that's done, as I say, through the 2 major parts of our business, right the way up until judgment or settlement. So what are our differentiators? As I say, direct capture is the big one, the impecunious market. And we've been very busy over the last few years in terms of motorcycles. Motorcycles are now a very significant part of our business. I think very roughly 65 to 70% at the moment of our vehicles on the roads are motorcycles. And that's partly because the courier market has been extremely buoyant, especially in urban areas. A lot of our business is in urban areas, particularly within the M25. And I think we're all aware of how busy the couriers have been. Bicycles is a small part of our business. It's a growing part, but it's an interesting one. If a bicycle is involved in an accident, then, broadly speaking, we don't repair it. We'll just buy them a new one. It's something which we've been working on to get the profile up a little bit. Just in terms of our marketing activities, it's worth pointing out that on the motorbike side, we sponsor the Yamaha race team for the British Superbike Championships. That's something which our garage operators love. They're all petrol heads, and they like coming to the events, and they go down the pits and meet the riders and so on and so forth. And on the cycling side, we actually sponsor the UK ladies cycling team. Integrated approach, credit hire and legal services, that's unique for us. Previous credit hire companies which have perhaps come unstuck, that's broadly speaking because they're not able to recover their costs. They send, as I said earlier, increasingly desperate letters to the insurance companies asking them to pay up. And when those letters are ignored, then there's very little they can do. It's pretty straightforward with us. If our letters are ignored, we issue a writ. Alan Sellers set this business up in 1996 and has been involved in it throughout. And a lot of the team that is with us now has been with us since inception. We have a major in-house screening procedure, so that if somebody is involved in an accident and they come to us, there are a number of things which we do, but obviously we look at things like Google Maps, we look at potential witness statements where necessary. Obviously, if we can get an admission of liability to start with, then that's fantastic. It's amazing how many people, when you pick up the phone to them and say, I understand you were in an accident, will say, yes, absolutely, I'm terribly sorry, it was my fault, at which point that's a straightforward case. So we have a less than 2% failure rate of cases where we commence litigation. And this is important, 98.5% of our cases settle before a court appearance. Some of those go all the way to the court steps and settle just before the hearing. Some of those settle earlier. In terms of settlement, obviously, the earlier they settle, the better for us because we can recycle that cash back into the business to put another vehicle on the road. So moving on, as I say, these figures are historical, but it's worth pointing out. We were net cash generative throughout that period. This is important. You know, a lot of our investors, particularly institutional, are anxious that we prove that we are able to generate cash because historically every penny that we've generated in the business has gone back into putting vehicles on the road. So we are now in a position where we can say that. We were looking at strengthening the balance sheet. We did a placing in May of 2020, raised 7 million of that. We raised 2.1 million from a litigation funder for investment into the VW emissions case, which I'll talk about later. And we've also have a 5 million loan drawn down from the CBILS scheme, which we took down in the middle of the year. So what happened in terms of initial lockdown? I'll come on to this in more detail later, but obviously in March, almost exactly a year from today, the number of vehicles declined markedly. I mean, normally in a normal week, we put somewhere between 150 and 180 vehicles on the road. I think that last week in March, after the first lockdown, I think the number was 44. So it dropped off very heavily. What was very encouraging was the extent to which it bounced back again after that. The figure for the end of the first half at 1380 was broadly speaking in line with what we've seen historically. As I will come on to later, in the second half of 2020, that number actually rose markedly, and we were looking at record levels towards the end of the year. Now, similarly, when lockdown first came in, we saw a decrease in cash receipts and fee income just because the whole system slowed down a little bit as people got used to the idea of working from home, and the courts got used to the idea of operating remotely, either via telephone or via things like Zoom where necessary. But once again, we saw a good, really high quality rebound in that. Our people got very used to working from home very quickly, and we kept the office open, the legal offices open 24 hours a day. As you can imagine, these cases generate a ton of paperwork, and if somebody decided they needed to get a whole load of new case files, they could, if they wanted to, come into the office at 2 o'clock in the morning when there was nobody around and pick the files up then. That worked extremely well. So we said at the end of the first half that we were looking forward to a very decent rebound in H2. Moving on to slide 9, just to give you a flavor of the kind of KPIs we use to measure our performance. As I said before, measuring the vehicles on hire at period end and also averages is key for us. And you'll see, as I said earlier, we saw a decline in the first half of 2020 as against 2019. But as I said, we'll be seeing those rebound in the second half of 2020, and the average vehicles on hire for the year will exceed that of 2019. Completed vehicles hire came down, but hire cases settled went up, and that's partly a function of the fact that we have been expanding our litigation business very actively over the last couple of years. And you'll see from this that firstly, cash collections have gone up, and secondly, there's an obvious increase in the number of legal staff that we employ. We started off with an office in Liverpool. That's the one that's been there since more or less inception. At the end of 2018, we opened an office in Bolton, which actually broke even within, I think, 3 to 4 months. We now employ some 200 people in that. And as of the first quarter of this year, we've got a new office open in Leeds. That's a small office. I mean, I think we're looking currently at staffing it with 20 people. That will probably grow to about 40. So it's not huge, but it is a sign of further growth here. So the average number of senior fee earners, these are the people who negotiate the settlements with the defendant solicitors, has gone up. It went up in the first half by a short 40%. And that directly impacts on the cash that we can collect. It's a very straightforward equation. More people sitting on seats equals more settlements equals more cash collection. And you'll see there that we slightly declined in the number of new cases funded. Broadly speaking, we put about 6,000 vehicles on the road last year out of about 12,000 opportunities. And that's also important to bear in mind that we turn away about 50% of the work that we're offered, either because we don't think it's a nailed on case where we're confident of getting a win should it go to court, and partly because these cases are perhaps not necessarily economical to us. So for instance, if somebody comes along with a Range Rover, and Impecunious people do drive Range Rovers sometimes, then a Range Rover is maybe going to be a £15,000 repair. That's a lot of working capital to tie up in one repair. I can put probably 4 or 5, maybe 6 motorcycles on the road for that amount of money. So it's a more efficient use of our working capital, perhaps, to turn that business away. Moving on, so looking at business trends in the second half, it's important to bear in mind that there are no winners in this pandemic, but we're very proud of the fact that we were fully operational throughout the second, both the first and second lockdowns. We really haven't furloughed people at all. The offices have remained open throughout, as I said. And basically, we have in terms of our depots, we've got 4 depots for the credit hire side of things in various parts of the country. There's one in Potters Bar, there's one in Ormskirk, there's one in Frome in Somerset, and there's one near Solihull. And those were all open throughout as well. And we just made sure that we, obviously all our cars get valeted when they come off hire, and we just made sure that was done particularly diligently. Number of vehicles, as I said, reached record levels pre the 2nd November lockdown. And what was also interesting was that we did get increased market share due to a number of competitors pulling out of the sector. Now, part of this is to do with the PI reforms. I'm sure a lot of you are familiar with the Civil Liability Act, which was supposed to come in about 18 months ago, and now looks as though it will become law in I think May of 2021. That effectively gets rid of the PI claims industry, and an awful lot of solicitors who've been making a living out of PI claims have, I think, decided that clearly there's not a future in that for them. We have seen them beginning to throw in the towel. Similarly, there have been a number of those who've been operating small credit hire operations. They've got a handful of vehicles because really they're looking for the PI work, and those have pulled out. Now, that means that a number of garages have come to us to say, well, actually, the person who we used to introduce our customers to has pulled out of the business. Could we start introducing them to you instead? I beg your pardon. And that has enabled us to get a couple of really good quality people on board. It's been particularly good for McCams, and as I said before, the courier market has grown very strongly over the last year or so. I don't know whether you saw this announcement a while back, but Deliveroo said, for instance, they were starting to operate in another, I think, 100 small towns in the UK. And I can't remember why this particular one sticks in my memory, probably because it's the last one on the list, but Yeovil was one of them. Now, I'm not sure I've ever been to Yeovil, but I imagine it's 15, 20,000 people. So these are not big towns, but they're towns where clearly there is a market for this sort of operation. So that growth is going to continue. As I said earlier, the courts remained open. Cases were heard over the telephone or via Zoom where necessary. These are civil cases, so it's not a criminal court, so you don't have the requirements which criminal cases do. We've said the cash collections for 2020 are looking to exceed 2019 levels, which is a significant milestone for us. And we're continuing to recruit good people to make sure that we can keep that trend going, get the settlements up, get the cash coming through. I mentioned earlier that CAMS has been doing better, and it's a truism that the bicycle sales have been extremely high. The more bicycles there are, the more people who are going to be falling off them. So it's an interesting business for us to keep an eye on. Looking on to the trading update for 2020. So this came out at the beginning of this year. Revenue growth is ahead of management expectations. We saw a slight decline as a consequence of the second lockdown, but the average number of vehicles, as I said earlier, for 2020 is going to exceed the figure for 2019. That is, in our view, an excellent result, given the turmoil there's been during the course of the year. Record cash collections in December, and I've mentioned before about the fact that we're still continuing to recruit staff and that the Leeds office is now operational. VW cases, I'll come on to this in just a sec, but we've got about 14,300 of those, and we've so far spent about 2.9 million in terms of acquiring those. And so our PBT for 2020 is expected to be in line with forecasts, and we have to take into account the investment into the emissions case acquisition. So we're comfortable, we're confident for the future, and we believe there are a lot of opportunities as competitors continue to review their position in the market, and as there is potential for considerable market growth. Our numbers are coming out on the 27th of April. That's a Tuesday. So looking at VW emissions, just to reiterate for those people who may not be familiar with it, there's a class action outstanding against Volkswagen, suggesting that alleging that they subverted key air pollution tests in their vehicles. Now, there have been previous settlements by Volkswagen in various jurisdictions, including the US, Australia, Brazil, and Germany. Quite recently, the Spanish courts ruled that VW had to pay each claimant in Spain 3,000 euros in compensation. In this country, the High Court has ruled that VW did subvert key air pollution tests, and that they have been refused leave to appeal against that judgment of liability. So the ball is really in VW's court, and we're waiting to see what happens. What's happened in other jurisdictions, and I can't guarantee what will happen in the UK, but in other jurisdictions, they have asked for a settlement, which means that they have set a cut-off date for the registration of claims. And once they have an idea of the number of claims outstanding against them, that's the point at which they say, well, this is how we're going to settle. Now, we've been attracting customers through a social media campaign and also through our group records. Obviously, we've had a lot of VWs through our hands over the years, and it's quite straightforward to look up our former customers to see whether they are eligible to make a claim. And just to be clear, we have a specialist advocacy team which is looking after this, which is separate from the normal claims process within Bond Turner. Now, it's important to say there's no guarantee of settlement on this. At the moment, VW are not saying anything, and in theory, the case would proceed to the courts, but there's already a judgment of liability against them. So I'm not sure what the benefit of that would be for them. But there is no guarantee of a settlement. Any settlement would result in us receiving a proportion of damages awarded, and we would also be entitled to receive our legal costs. It's important to bear in mind that any costs incurred during the VW emissions case in terms of gathering cases are expensed as incurred. In other words, they just go out as normal wage cost through the P&L. So a legal cost would come in as effectively an extraordinary item. One other thing which I would like to highlight is our new major shareholder. And you may have seen at the tail end of last year, we announced an agreement with DBay Advisors, DBay based in London and also in the Isle of Man. And they put together a deal where they're buying 29% from our founding shareholders at £1.50 a share. They've got 9.9% at the moment. The other 19.1% is awaiting regulatory approval from both the FCA and also the Solicitors Regulatory Authority. I've actually had some emails today, and I think there'll be an announcement imminently about that. And we let us assume that they will end up with their 29% stake. That gives them the right to appoint up to 3 directors to the board. We've currently appointed one of DBay's founders and investment directors as a non-exec director to the board. And Alan and Sam and Tina Slater have undertaken to lock themselves up for another 18 months. So you'll see there, following completion, the resulting holdings will be as follows. That's, says he doing quick mental maths, 38%. And that's going to stay that way for the time being. So we're excited by that. It's a major investment by a serious investor, and we believe that they are going to be supportive to us going forward. So that's been a sort of trot through. Just to be clear on the appendices, I don't want to spend a huge amount of time on these, but the first appendix, which is slide 15, financial highlights for the 6 months. I think they're relatively self-explanatory. One thing I would point out is that we've had significant investment in staff to drive the settlements. That's 2.6 million. As I mentioned before, investment in VW first half 0.7, and more than that in the second half. That was a figure I mentioned earlier. And also, obviously, we've been expanding the offices. We do pay a dividend. It's a progressive dividend policy. We paid £0.015 for 2019. I hope that we will pay a similar sort of dividend for 2020. And you'll see that the debt balance is entirely manageable. Second slide in the appendix is just a quick run through of what's been happening with the legal services. Once again, it's all about cash collections, and it's all about the number of senior fee earners. And so those numbers continue to rise. Credit hire, which is the following slide, gives you an idea of what happened in terms of the decline. Once again, we saw the decline in revenues and number of vehicles on the road, but as I say, that is historic. And the figure which we used in November was 1,902, which is a historically very high, in fact, almost at capacity for us. We can't really work at 100% capacity because the fleet managers tend to get a bit twitchy. You're always going to have some vehicles off the road or in transit between one or more of our depots. We finish with an income statement on the following slide, the balance sheet and the cash flow, all of which I hope are relatively self-explanatory. So really in, what's that, 30 minutes or so, that is broadly speaking, the run through of the presentation. As I say, we're excited about what's in store for the future, and we're looking forward to getting the numbers out there at the end of April. In the meantime, I will be very happy to take any questions. I should add, you know, I'm the monkey rather than the organ grinder. I'm not an accountant, and there may be questions which I'm unable to answer. And if I can't answer them, I'll put my hand up and say I can't, but I will go away, find the answer, and come back to you.
Thank you very much, Nick. We already have some questions in, but just a reminder to everybody on the line that if you want to click on the Q&A box at the bottom and feed a question through, we'll get through them in due course. First question, it's not entirely clear how Anexo derives its revenue and profit, i.e. professional markup on claims to insurers, for example, or vehicle rental, etc. Could you elaborate a little more on the breakdown of where the profit's coming from?
Well, yes. I mean, we operate a credit hire. Okay, on the credit hire side, we operate a credit hire business. We hire vehicles at credit hire rates, which are higher than spot rates. As I said before, if you hired a car from, you know, Budget, let's say, and you rang them up and said, I need a car in a week's time, you would get a lower rate than the one that we charge. Having said that, if you walked into Budget now and said, you know, I've just been involved in an accident, I need to drive a car away now, the rates they would charge you would be not dissimilar to the ones we are charging. But ultimately, we lease the majority of our vehicles. Our cars and commercials are leased, and our high-powered bikes are leased. We own the bikes outright, but ultimately we charge those out at a rate which books in a level of profit. It also books in the higher rate is also reflective of the amount of time it may take us to get our money back from the insurance company, because sometimes there's a considerable wait for a court date. So that's also factored in. But on the credit hire side, it's very straightforward. We hire our vehicles out at a higher rate than what it costs us to either lease or buy them. On the legal side, you know, we charge commercial legal rates, and therefore, you know, our staff are paid X and they're charged out at Y. The disbursements and everything else comes in as cost, and there's no markup on those.
So yeah, I think it's quite useful to kind of imagine it in your mind. So if you were looking at a typical case, you know, roughly, how much is it costing you to lease the vehicle that you're providing on credit hire? Sure. And how much is it costing you in legal fees to recover everything over the period of time it takes?
Sure.
And if you add those, and then how much revenue do you actually get in after
Sure.
the many months
No,
of waiting that covers all of that might be quite helpful to understand.
Sure. We have to, I mean, you'll understand there's a certain amount of commercial sensitivity about this, but for instance, if we have a vehicle, we have our vehicles on 2 to 3 year leases. So we will, I mean, you know, what does a lease car cost you? It costs you several £100 a month.
Mm-hmm.
And the daily cost of one of our vehicles is probably going to be around about a couple of £100 a day. Okay,
that's the credit hire sort of list price.
That's the credit hire lease price. Okay.
Yeah.
So you know you can factor in the maths on that relatively straightforwardly. And now it's important to bear in mind that these are not figures that are plucked out of the air. This is an established credit hire rate, which takes into account what else is being charged in the market, and is by no means the highest rate which is being charged out there. And never in all of our history with this, and on the occasions when cases have gone to court, at no stage has any judge ever said to us, we believe these rates are egregious and they're too high. That is not an issue. Ultimately, we're using the principle that it's a common law principle that you have to take your victim as you find him. If we have somebody who is deprived of their vehicle, there is no reason for them to be on the bus or having to walk to work or whatever it happens to be, simply because they don't have any money themselves. We are assuming the risk, because the contract is with the customer, we are assuming the risk that if the case is lost, then there's no point in us attempting to claim against the contractual party, a counterparty, which is the customer, because we know by definition they haven't got any money. So, but sorry, to come back to your point, I mean, you know, you can do some mental maths on this. To be honest, I'm not in a position to give you chapter and verse on exactly how it works in a public forum, because there's a lot of commercial sensitivity within that. But ultimately, the credit hire charges compensate for the lease costs of the vehicle. In terms of what we do on the legal side, similarly, you know, everybody knows, I think, roughly what solicitors' charge rates are, and ours are commensurate with that. As I say, we don't put a markup on disbursements, things like court fees and the other kind of disbursements which we have to make. Those are straightforwardly paid out and then recouped in general terms.
Right. So I've noticed, yeah, I think you're right. I could probably back calculate some of it just from looking at the P&L and from what I know about the industry, but I've never sort of sat down and tried it. But I realize on paper there's a massive markup between your lease cost for the car and the credit hire rate. But then, like you say, you're taking on extra risk and so on, and you never recover all of that anyway. There's always a settlement at below the level of the paper price that you're claiming,
so
of course.
Yeah, there's 2 points about this. That ultimately there's a difference between a repair case and a write-off case. Okay, a repair case normally takes 4 to 6 weeks. And at the end of that period, the customer gets his vehicle back, he gives us our vehicle back, and the hire period stops there. At that point, we send the insurance company a bill, which basically says, these are the number of days we've had the hire car, the vehicle out on hire for. This is the cost of the repair. These are the other costs involved. That's what you owe us. And that's it, okay? And at that point, we know that that's the figure that's in order. With a write-off, it's rather different, because our customer is going to be in the vehicle until such time as the insurance company sends them a check for the value of the write-off vehicle. And that can stretch out for a long time. So we find that we're doing a lot more write-off cases. That's one of the reasons, incidentally, why we have a lot more motorbike cases, because a lot more motorbikes are written off than cars. If you're in a £500 motorbike and somebody knocks it down the road, nobody's going to repair that. It's going to be a write-off. So obviously, it's a more efficient use of our working capital if we can have vehicles on the road for longer. So, if you have somebody who is in a hire vehicle for multiple months simply because the insurance company hasn't got round to writing him a check, then that is, that's an effective use of our capital.
Right. Thank you. And on the if you looked at your gross margins, they're obviously very healthy. I haven't looked into detail at what's the cost of sales level to get to that gross margin, but I'm assuming that includes all of the legal costs that you're incurring in your casework. And is there anything and general admin? Is there potentially, or some of the, well, maybe not the admin, but is there anything else big in there, or is that it in terms of gross
I mean,
margin
one thing.
costs?
Well, one thing that's worth bearing in mind is insurance, because obviously we have to insure our fleet.
Right. Is that will come further down the P&L potentially? Does it?
Well, yes.
Am I straying into areas that are probably best addressed to the finance director? Maybe.
That's a very polite way of putting it. I think they probably are. But
okay, don't worry.
Look, if you've got any specific queries, then I'm
we
more
can.
than
Well, I'll
happy
forward them through. Yeah. Okay. Thank you. Yes. I was going off beam a bit, but I was just fascinated in trying to work out where all the moving parts were.
Sure.
Okay, let's move on to, that's me going off piste a little bit, so apologies to the rest of the audience. One here on capturing the leads. How do you capture the leads for the bicycle claims? One of our viewers here saying that they can't. We're assuming they don't go through the Fred in the shed car repairer. So how do you pick those up? And then also with the motorbike and the bicycle claims, do you pay the referring garage a fee of any kind?
Right. So sorry, the first question was pedal bicycles as opposed to motorbikes. Is that right? Yeah. Yes. I mean, as I say, that this is a relatively small business for us, a relatively new business for us, and we do advertise, and specifically things like sponsoring the ladies' bike team is something which has got the CAMS name out there. Now, if you said to somebody, what does CAMS stand for? In the same way that you said to somebody at a bike rally, what does McCAM stand for? They probably wouldn't be able to tell you. But ultimately, what we're trying to do is get the image out there and get market awareness going. So you're absolutely right. A cycle guy will not do that, but he goes to a cycle shop, and we do have people who go around the cycle shops, passing on the same message as we do with people who go around the Fred and the Shed garages. So independent cycle stores are exactly the same as independent garages. The difference being that the guy's going to be going in there saying, I don't want you to fix my bike. Then they'll go in and just have a general chat about how awful their life is, and that's where it comes from.
Right, okay. And with regard to the motorbikes then and repair shops, if they are going in for repair, are you paying some kind of fee to the finder's fee to the garage that refers them on to you or anything?
But we're not allowed to pay a marketing fee as such. We are. I mean, ultimately, the benefit for the garage is they get paid in full and on time, and they get repeat business out of it, free advertising, and customer satisfaction. But in terms of, and also incidentally, if there's a write-off, they're also entitled to get storage charges. They can get out with a low loader, pick the vehicle up, and so on. So where there is not marketing involved as such, then we are allowed to pay a referral fee or an introductory fee.
Okay, thank you.
And it depends, just in terms of the garages. Some of them will give us 20 cases a month. Some of them will give us a case a month. Some of them won't give us any cases for 6 months. It just depends. It's up to our reps to keep going around and keep on making sure that they're aware of our existence.
Right. Thank you. What risks are there around the legislative changes in allowing you to act on behalf of impecunious clients? Is there a risk there? And can you legally act on behalf of anyone, or is there a specific definition of your potential client base, i.e. impecunious clients?
Sure. Okay, 2 points here. We act for everybody, not just impecunious clients. We tend to attract impecunious clients because that's the market we're in, because that's where we get our business from. Because we run a direct capture model, we tend to get people who, by definition, are unable or reluctant to go to a main dealer garage, which you and I might go to. If we've got a 2-year-old car, we may very well go back to the garage that we bought it from. But we do deal with people who are non-impecunious, or pecunious, I suppose, and we don't know at the time that we take the case on as to what their financial situation is. So, if somebody goes in, if somebody comes to us and says, "Well, can we put a vehicle on the road?" We tend to try and put a vehicle on the road within 24 hours. So we'll put the vehicle on the road. At that point, they then are asked to give us their financial details, and we do a full financial check on them, including bank accounts, credit card statements, and things like that. And at that point, we will find out whether or not they have money. So it means that we will take the case on if we think we're going to win it. All it means is that we are more likely to settle earlier at a lower percentage than the full cost of the case, because were it to go to court, then it would be unlikely that the credit hire charges would be upheld, because it would be a reasonable supposition that our client could have gone elsewhere had he wanted to. Okay, so the incentive then is to make sure that we can settle the case in a timely fashion. So, the impecunious client is, as I say, it's our traditional and most obvious business model, but we do get others, and it's very difficult to tell. I mean, my directors tell two anecdotes. Number one, of the airline pilot who in theory was earning a very good salary at BA, but it turned out he had 6 children and 2 ex-wives, and therefore he didn't have any money. The corollary of that example, and this is a good one, is the trainee plumber who's earning 10 grand a year, learning his trade, but he lives with his mum and dad. He doesn't have any outgoings, he doesn't pay rent or anything, and he's got £5,000 in the bank. So he is not impecunious, even though he gives every impression of being so. Secondly, to deal with your point on legislation, as I say, there's no statute on this. There was a CMA review of this in 2014. This is quite important. And this was mainly looking at the PI business. And the conclusion of the CMA review was that if there was reform to the PI claims industry, which is what the Civil Liability Act was sought to address, that would impact insurance premiums by up to £50 per year. If there was some sort of supposed legislation or regulation of the credit hire part of it, then that would have a £7 impact in terms of insurance policies. So it was deemed to be not material, and it wasn't an inefficiency in the business. Now, on top of that, case history, which we've had, which I think I mentioned, has got up to 3 cases going up to the Supreme Court, says that ultimately, taking your victim as you find him, there is no reason why a poor person should be deprived of a vehicle through an accident that wasn't his fault just because he doesn't have any money. We don't believe that any government of whatever hue is going to effectively legislate to make poor people poorer by saying we are going to make it impossible for you to access a credit hire vehicle, because even if that's your only means of getting the kids to school or whatever. I mean, we make no bones about it. We're in, this is a commercial business, but we believe also that we do fulfill, we do something good, because we do actually enable people who would otherwise be handicapped by not having a vehicle to get one.
In terms of credit hire rates generally, since we saw your presentation a couple of years ago, in the market, have they stayed roughly where they were 2 years ago, or are they moving up or down?
Yeah, they're pretty stable, really. I mean, there aren't a huge number of, there are a number of smaller businesses who operate very small credit hire fleets, and those tend to be at the top end, and they're slightly more volatile. But we've seen them prove very stable in the same way, actually, that spot hire rates have been, broadly speaking. Spot hire rates have been longer term been coming down, but we remain more or less the same. And we do keep an eye on it on a regular basis. These are not fixed sums. We make sure that we are aware of what is out there in terms of credit hire rates, and we adjust accordingly.
What's likely in the marketplace to drive credit hire prices one way or the other? What are the biggest factors? Well,
obviously, supply and demand is a straightforward one. I don't think leasing costs are much of an issue. I think insurance is an issue. I don't bring in shoehorn insurance into it, but it is an issue. We have to insure our fleet, and that is something which is reflected in what happens with credit hire rates. But it is relatively straightforward in the sense that your costs are relatively fixed, your leasing costs and so on. You can plan those well in advance, so you've got a pretty good idea of where you're going to place yourself for some period into the future.
Do you see any of the big insurers talking about in some way changing the way that particular market works, or taking some cost out somehow?
Well, not really. I mean, insurance companies, we're not in the business of criticizing insurance companies, but we've been dealing with them. Alan's been dealing with them for 25 years, and there are some inefficiencies within that business. And one of the things which I think we'd be keen to do, we have a protocol with a major insurance company. We have been discussing more protocol agreements, and we would like more. And the idea of a protocol is to simply say, we will pay you a fixed percentage of your claim within a fixed period. And it would be a relatively short period, let's say 100 days. Now, if we could get that, then obviously that's extremely good for our working capital, because it means we can recycle our working capital more quickly into putting new vehicles on the road. And we have greater certainty as to how long that capital is going to be tied up for. So,
right.
So in terms of that, we would love to have further discussions with insurance companies. I mean, the fact remains that insurance companies don't seem to recognize the extent to which their internal inefficiencies are making their lives more difficult than they can be. And it's not for me to comment on how they run their businesses, but it's difficult for us to get a response, broadly speaking, out of insurance companies. We deal with between 200 and 250 insurance companies on a daily basis, and it is very difficult to get them to recognize the fact that when we put in a claim, then that claim should be dealt with both in a timely and efficient manner. And that's ultimately why we have to resort to the court process.
Yeah. Maybe it's just not a big enough percentage of their business for them to.
Well, I think that's absolutely fair. Another anecdote, very briefly, which my CFO is very fond of telling, is around about float time, which was June, July 2018. He had a meeting set up with one of the major insurance companies, and about a week beforehand, the guy rang up and said, how much are we talking about in terms of this meeting? And so he got his calculator out and pressed the buttons and said, well, in terms of the overall exposure that you have with us, it's about 20 to 25 million. And the guy said, well, I haven't got time to see you. And the rationale behind that was, we're an insurance company. We insure oil tankers, aircraft carriers, all these things. 20 to 25 million, especially when it's made up of, let's say, 1,000 or 1,500 small cases. Actually, sorry, considerably more than that, but hundreds of and hundreds of small cases. It just doesn't register on our radar, and I think that really is part of the issue. Also, insurance companies tend to be very fragmented, so what works with one branch office may not work with another, and we certainly find that in terms of our negotiation.
Right. Okay. Thanks, Nick. Couple more questions just coming in here. The residual value of the vehicles at the end of its lease, does that in any way affect profitability that you're reporting?
We're not interested. We're not second-hand car salesmen. We're not interested in that stuff. So ultimately, the lease finishes off. We'll get another lease on a new vehicle, and they'll go back. We don't get involved in that.
Right. Just remind me, I haven't gone into your balance sheet in great detail, but you were talking about a lot of the assets being leased, but I seem to remember there's quite a lot of capex being spent as well. What's the capex going on?
Well, in terms of what we got on the balance sheet at the moment, we've got, I don't know, very roughly £10 million in paid out repair payments. We've got probably 20 million of other disbursements, so that's court issue fees, medical reports, things like that. So that's the sort of figures that are going into that. I mean, if you want a full analysis of the balance sheet, then I can certainly provide you with one, but I probably can't do it straight off the top of my head.
Okay, yeah, those will be ongoing costs, but I was more interested in where you were spending the capex, but maybe that's
we do buy. Okay, so we buy our 125cc motorbikes and below. We own those outright with an element of HP.
So that's pretty much all the capex is pretty much going on those, is it? Oh, yeah, right. Okay.
So post float, we spent I think £4 million on bikes in 2018. We're Yamaha's biggest customer in Europe, which is one of the reasons why we have such an excellent relationship.
I didn't realise it was that many bikes. Goodness me. Okay.
Well, there's a big turnover in them because we lose one or two a day, either because it gets written off or because it gets pinched. They all got trekkers in, by the way. We usually tend to get them back, but the turnover is huge. And actually, we've bought a lot of motorbikes over the last year or so, and there's a shortage of motorbikes in the UK at the moment, partly because we bought them all. But
okay. Just a quick one here about geographic bias. Is there any geographic bias in terms of the business, or is it pretty evenly spread?
We're England and Wales at the moment. We don't do Scotland. That's something which we're looking at for the future, which would involve obviously buying a Scottish firm of solicitors because Scottish law is different. In terms of where we are in England and Wales, we have a sales team of I think 26 people at the moment. It was 22 for a long time. We've just started adding to it. And those are spread all over the country, but they cover very, very wide areas, and we would like more of them. So until very recently, we had one person doing the whole of Wales. We had one person doing the whole of Devon and Cornwall. Now, clearly, that's not enough. And in fact, if you look at where they're based, then it's fairly obvious the patches which they concentrate on. So to a certain extent, we're restricted by the ability of our salespeople to cover their sales area. But we obviously have a lot in urban areas. We do a lot of business within the M25. We do a lot of business around major conurbations, Liverpool, Manchester, Birmingham, and so on. And but ultimately, it is a business that there's a lot of room for expansion. Just because people live in rural areas, it doesn't mean that they're any less likely to run into each other.
Right.
And so it's something which there is plenty of room for expansion.
All right, thank you. I'm conscious I just clicked on one by mistake, and apologies to my fellow director Chris. I've deleted his one about the VW claim. So this one's about the VW claim. Well, just asking whether it'll be a game changer for Anexo. It's obviously a huge chunk of opportunity, but also cost at the moment whilst you're spinning the wheels trying to get the claim through and so on. Do you want to, have you put out any estimates of what the likely benefit will be if a successful claim goes through in terms of to Anexo?
Sure. I mean, we haven't put specific numbers out there, and we don't want to really, because VW, I'm sure, have their own ideas. There is when we originally announced the VW thing last year, there were a number of figures which I put on the statement with regard to what was settled in other jurisdictions, and that ranged from memory, broadly speaking, from about £900 per claim in Australia up to a very considerable figure in the US. If you happen to have bought a brand new top of the range Volkswagen, the day before these things were found, then I think you were in line for $40,000 or something like that. It was a very large sum of money. Broadly speaking, any award that's been made to the claimant, then we would get somewhere between 40 and 50% of that. That's our share of the pie. And also, obviously, as I said before, we're entitled to recover legal costs.
So that would be on top of the 40 to 50%. You would also. Oh no, that's from the VW. Sorry, yeah.
Sorry, that's from the VW. Yeah. So I mean, let's say for the sake of argument that in Spain, it's a matter of record that the Spanish courts have said €3,000. Now, for ease of maths, why don't we call that £3,000? Divide that by 2, 1,500. Legal costs would be, I would suggest, very roughly the same. So let's take this is a back of a fag packet figure, but that's £3,000 in terms of legal costs plus share of claim. We at the moment have 14,300 claimants or thereabouts. That's a big number.
Yes, 42 million or thereabouts. And you've been expensing the legal costs as you've gone along, so they're already in the P&L.
Exactly. Yeah.
Okay.
So yes, it's a big figure. The other thing to bear in mind is that, don't forget, this is not just VW centered. There are other manufacturers who are in the sites as well: Mercedes, BMW, Jaguar, Land Rover, etc., etc. Fiat, Chrysler have come in. I saw one on my social media feed today about GM Vauxhall. So there's going to be a lot more litigation on this, and we shall also be looking to be involved in that.
Okay, thank you. One here on the trading update you gave on the 25th of January where it explained you were continuing to recruit in Bond Turner, which sounds quite positive, as is the statement that you expect to meet market expectations of adjusted profit before tax. So getting to the question, with less traffic on the roads due to COVID, have there been fewer accidents, fewer claims, or are the numbers of claims continuing to rise?
The number of claims have been absolutely fine. It's been, we've been quite startled with that. Don't forget, we're still turning away. As I said before, we're turning away about 50% of the claims that we get offered. So very broadly speaking, in 2019, the figure was we were offered 12,000. We put 6,000 vehicles on the road. I can't give you an exact figure, but it's a similar percentage and likely to be a higher figure for 2020. So in other words, let's say for the sake of argument, if we put 7,000 vehicles on the road, that's probably out of very roughly 14,000 opportunities. So we haven't seen a decline in that at all.
Okay, thank you. How have the settlement rates in terms of the number of cases been impacted by the most recent lockdown?
To a certain extent, that's within our control. So just to be clear, we have two levers that we can pull in the business at any given time. We can look at the number of vehicles we've got on the road and say, right, we're using our working capital to X amount of capacity. If we've got some spare cash around, then we can put more vehicles on the road. If we feel that we need to get more cash in, then we can increase we can we can make sure that we get more settlements in so that more cash comes in. So every day there's 2 emails that go out. And in the morning there's an email which says, these are the vehicles we've got on the road for today. And in the evening there's an email that goes out which says, effectively, these are the checks that are landed on the map today. So at any given time, we can monitor our working capital. Now, if we felt that there was a case ongoing where we felt, A, that there might be some further disagreement should it come to court. Number 2, where we felt that the defendant solicitors were prepared to negotiate to a certain level, but weren't prepared to go any further and it would drag the thing out. Ultimately, we have the ability to say, let's settle the case now at a particular figure which we can decide, because then that frees up the capital that we can then use to put more vehicles on the road. So, you know, part of the skill that our senior legal people have is their ability to gauge to what extent they need to, or they're able to play hardball, I suppose, for want of a better word, or to what extent they can sit there and say, actually, do you know what? Let's just settle this, get this one out of the way. We don't forget, we also have a backlog of about 19,000 cases at the moment. So, you know, if we never put another vehicle on the road, we've got about 3 years worth of runoff in terms of dealing with that backlog. And some of those have been going on for some considerable time. And what happens, just very quickly, I appreciate time is pressing, but what happens is that if we get a new recruit in, it takes, you know, 6 to 9 months, maybe a little bit longer, to get new recruits fully up to speed in terms, but we'll give them some files, we'll give them some nice files which are close to completion, because they're obviously very encouraging to get going. We'll give them some more difficult ones, but also we'll get some out of the vault, which have maybe been outstanding for a while, and get those moving again and try and get those working their way through the system. So we have considerable control over the level and speed with which we can settle.
Okay, well, thanks very much, Nick. We're out of time, so thank you very much for taking us very quickly through an awful lot of stuff there. And we'll, if we've got any more questions, we could drop you a line then, and you come back to us, will you?
Okay, could I just say thanks very much? My details are on the Anexo website, and always delighted to answer to any queries, and always delighted to pass them on to somebody who knows more than I do. So,
all right.
Thank you very much for your time.
Well, thank you, Nick. Thanks for joining us. Nice to see you again. Take care.
Thank you. Bye.
Bye.